Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Together, we're going to take a look at the Forex market and specifically with the focus on moving averages. Before we do that, though, be aware that this webinar is intended for a global audience and may not be suitable for everyone. Therefore, take a look at this link, admiralmarketsglobal.com. Thereafter, select your country of residence and then contact an appropriate entity to find out more about that and other conditions and details. Also, be aware that trading for exchange and other financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Plus, you are aware of the risk involved when trading. Just in case you are new to this webinar, take a look at MetaTrader 4 Supreme Edition of Admiral Markets. You can go to the website admiralmarkets.com and you can click on find out more. There are a lot of extra advantages that makes trading life a bit easier. 56 in total, in fact, ranging from everything like an alarm manager to calculating your lot size a lot easier than doing it either by heart or on paper or whatever. It's makes it a lot easier to do that with the calculator that is in that Supreme Edition that's in the MT4. Alrighty, so let me open the chat just in case you want to communicate with me. You can do that by writing me a message. We're going to take a look first of all at the calendar today, as always. Is there anything big going on? Well, we do have the some pound news later today, or I think it's in the morning. I think it's the some inflation news. Let's see if we can find it here. Let's see. Maybe it's a different day. I'm not sure. Anyhow, the German news does have a IFO business climate, and what else do we got going? We got U.S. GDP growth. That's always interesting. Of course, any of these U.S. numbers are going to be very interesting to see what the Fed might do in December. And the market seems to be expecting more and more so a rate increase considering the decent U.S. numbers. In fact, inflation, I guess, is still not as it should be. It's not as high as probably the Fed wants it. It's kind of on the low side still, to be honest, compared to their target. But if you compare all the data, there is some rebound here occurring that might just be enough for them to pull the trigger in a way and so to speak and make the decision to make the rate hike. Looking at the global conditions, of course, we definitely see a divergence. That's not uncommon to see divergence between the U.S. and Europe and probably the rest of the world following and trailing behind the U.S. Whether that will happen again, will the world follow so quickly in the U.S. footsteps after they do an increase? Not too sure about that, really. Definitely seems to be a different environment than maybe we've seen in the past 25, 30, 40 years or so. So it's difficult to say. It seems like we're kind of in not a repetitive cycle here, but in a new environment, I would say. So it's going to be a difficult decision. I think that you can see pros and cons of both decisions, keeping the rate, increasing the rate. I myself still lean towards no, but I do realize that the chance is a bit higher than maybe a month or two ago. I would still call it probably a 45 yes, 55 no. Market probably sees it as 65 yes, 35 no, I think. So we'll find out sooner or later. But all these data points are very important. All right, let's take a look. Here you can find some technical analysis on the website as well. By the way, just in case you're joining us for the first time, you can go to the website and you can click on analytics. You can find a lot of other things. And yesterday was the pound odd. Seems to be vulnerable to continue drifting lower. That's today, in fact. Sorry. Yesterday, Nana talked about the dollar yen. And odd yen might witness some further upside, so you can get some inspiration for potential ideas perhaps here. Also good to keep an eye on the heat map. That's part of the website too. Let's take a look at the big movers, see what kind of volatility we have. Pound New Zealand, pound odd. Not surprising, always at the top range here. Not much movement because they're around at 0%, but a lot of volatility, a lot of ups and downs. But ultimately, they ended up at the same spot. Euro New Zealand, good upside, good volatility. Pound, CAD, volatility. Let's see. Um, yeah, there wasn't a big move except the Euro New Zealand Euro odd when looking at this heat map. And to the downside, New Zealand yen, maybe pound yen as well, right? As you can see. All right, so you can get some idea about that. All right, let's take a look at the charts now and take a look at the majors first of all. If there's anything wrong with the sound, just let me know. All right, looking at the euro dollar now, we can see the price is at an important zone. I mean, we're talking about a yearly low. We're talking about this bottom here on the left. I'll draw a circle. This bottom, March this year, the downtrend marched lower and then suddenly halted, made double bottom, and we've been in a corrective period ever since. Excuse me. That correction, as you can see, lasted, well, about till this break, which happened last month, in fact. So that was a good long corrective zone. Price hit the 38.2 fib. I don't have that fib here, but when we put a fib on most of that downtrend, you would see that it hit the 38.2 fib to the pip. And that could be the end of what I call a wave 4. Looking at the moving averages, that is the focus of today. I have a 144 EMA close at the moment and a 21 EMA close on the chart. And this is a moving average that changes its color depending on the angle. So you can see green is bullish, orange is bearish, purple is bearish for the long-term one. Would be, I think, dark blue. I'm not sure what the upside color is. You don't see it here. But yeah, you can see that moving average is indicating the same, downtrend, 21 being pulled away from the 144. Afterwards, you see the moving averages being compressed towards each other. You see the space between them becoming smaller. You see price moving above 21, but going back to 144. Those are all typical. I'm talking about this zone, right in here. That's typical for correction. And now at the moment, you see those moving averages being pulled away from each other. So since the breakout, we've been already talking about it here, that there could be this continuation. That has happened. Price broke through this support line here, broke through another support line here, and we've had breakout and continuation so far. So yes, from that point of view, we are in a downtrend or back in a downtrend, but one major support level still stands in the way, and that's the yearly low and bottom. That is not going to be an easy level to crack, to break, and I myself am not trading it now to the downside because of that support level. That's, in my opinion, a major level, and I would like to see a break of that level, really price going below 104.60 before price gets into a zone where I consider shorts potentially possible for for setups. Not that I'm going to jump in a short immediately when it hits 104.45. I don't have any pending orders. I just mean that if it breaks below 104.60, that there's prices getting into a zone where I would consider shorts. I would zoom into lower time frames because we are looking at a daily chart. Zoom in, look at maybe some small bear flags, pullbacks. Look at the technicals that I normally do. If you follow, if you have seen this webinar before, and then try to find shorts. Right. At this moment, I don't consider this an interesting short zone just because of that support level. It's too important. Especially with 5 weeks to go in this year, we might not easily. We could get a bounce off this low, and we might not get a new lower low this year. It could be next year. So from my point of view, I would rather hunt for longs at this point off of this 88.6 fib. Let's take a look at this fib because I got it from here basically, right? This bottom to this top. Don't get confused. It's placed here just to make the lines a bit shorter, but from bottom to top, basically. Price respected the 50, respected the 61.8, and the 78.6 fib. So will it respect 88.6 fib as well? Well, there's a good chance, as always with fibs. And I think that from this point of view, I would kind of, how do you say it? I would give a higher chance that this is still just one big correction. Obviously, that's different when price indeed breaks through this bottom. This and this and this were those good places to go for shorts even below the 61.8? Yes, because there was space down to the bottom. Now, no. That environment has changed. And although price is in a breakout to the downside, I would find upside trades more lucrative and interesting as a basically reaction to, once again, this bottom. And in that case, if it does that, then price is in a bigger correction, and it could go sideways like this. Make a rally, retest this top, and that could play out the next 3-4 months, for instance, before the euro dollar, I should say, again later on, that still continues with that downtrend, because the overall environment is bearish. It's just a question of when does that downtrend continue. Will it be now or next month, let's say, or maybe later on? And I guess that answer partly ties into the rate increase or not. Well, if we get the rate increase, that could be a catalyst to break the bottom, right? To go through a support level like that would make sense. It's a heavy level, but the first rate increase since 10 years, I think, ago, right? Well, would probably be enough to beat that support. If we don't get that rate hike, well, then there is some ammunition here for to fuel a upside, right? And a rebound, and price could stay in the correction, this kind of corrective zone that we've seen for longer, for maybe next few months. Later down the road, maybe in 2016, we will get that rate hike, and price can continue. Here on the weekly chart, you can see it a bit better. Downside correction, right? How long will the correction last, and then downside. So this could be the start. I'm not saying, right? That's how a start normally looks like, but still very crucial is this bottom. So from that point of view, I think this is the long-term kind of perspective that I'm looking at. Let me get rid of this fib, because otherwise it's going to be trailing us on all time frames. 4-hour chart, well, yeah, definitely good downtrend, but we have, in the meantime, triple divergence. It's not something we see often on a 4-hour chart, at least, and quite rare. You definitely will see occasionally a double one. More often, of course, on a higher time frame, a single one is enough. On lower time frames, single divergence is a bit, is very, very, very common. Doesn't mean much, I would say. There, I would lean towards having a double divergence, especially if you go below 1-hour chart. Sorry about that. My throat is acting up a bit. So, and well, on a 4-hour chart, this is a bit more rare. So I would say this is an interesting piece of evidence for a potential reversal. And on a 4-hour chart, we see, I would say, signs of a falling wedge as well. Of course, you can connect these bottoms too, like this, and you can see that the pace of the downside is weakening in the last couple of breaks, right? Every time price breaks the bottom, it doesn't go too far, doesn't go too far. So you get a weaker angle of the support trend line of the channel here. And the weaker angle is indicating that there's more hesitation, I would say, with the downside. The divergence is also showing that. So those are a couple of clues in the 4-hour chart that, well, there's a red flag going on here. We hit the 88.6 fib, and it's kind of telling us, at least at the very minimum, I would say, sellers watch out, get out of your shorts, take profit. I would say that's the very minimum, personally. If you're in shorts, that's what I would do. Um, and maybe, right, if we look at it from a counter perspective, it could give the occasion for reversal trades. So is it already reversal time? Is it reversal time? Let's take a look. Recently, let's see, this one, two. Just in the recent bottoms already, here you got 3 breaks that didn't go too far. Now the target of divergence is at the very minimum long-term moving average, the 144 EMA. So from that point of view, we never got to the target. That target is still open at 108.50. Now bear in mind that that's not necessarily the only target. It's not the target. I mean, it could be slightly missed. Price could accelerate and skyrocket through it and make a reversal. It's just a general guideline of what we could expect from divergence before the divergence can be considered unimportant anymore. When the divergence is basically removed as an aspect to consider. It could be also taken into account as a target, but it shouldn't be the only thing. That target is still open. Price has not gone there anywhere near it. Not close enough to consider that to be taken out. So yeah, I think that reversal is going to happen at one point or another. The recent low, this candle low here, right? Because we got a lot of small pushes here and here and here. This one, we got the 4th candle not breaking this bottom. So slowly but surely got 1 or 2 more candles, and I would say that this impulse is officially over and out, and the likelihood of maybe some reversal is increasing. Good morning, Beverly. We're just talking about the fact that about interest rate and whether it will happen or not, and how that can impact the long term. Euro dollar now basically at the 88.6 fib when looking at this top and bottom. So I think it's more of a bouncing spot. That's what basically the quick summary. And now looking at the hourly, yeah, also very important the triple divergence here, and the fact that we can now, based on all those elements, basically 80.6 fib, the yearly low, the triple divergence get a rebound. So now we can see here on the hourly chart, slight impulse here, but still this resistance heavily impacting price. And what would we be looking for on hourly chart? I think what I would like to see probably is, probably a 5th candle here, not breaking this bottom. So we're talking about 1.5 more candles probably that have to be closed. And I think that will probably be the signal I'm waiting for. On the hourly chart, I'm a bit hesitant to use this hourly because the 4 hour is still not finishing the downside impulse. But if it maybe re-challenges this bottom here at 106, there could be a small inverted head and shoulders. That could be interesting. If it touches this trend line, perhaps, maybe once again a bounce. Of course, we want to be careful because it is in the downtrend, and if it starts pushing through this trend line, there could be a breakout to the downside as well. I'm not sure if I would be trading that because of all the divergence, but it could happen. But I still see this more of a support zone, at least until it stays above that trend line, and therefore reasons for a bounce. That could be one thing. A breakout here could be something to consider too. let me see, this 4-hour top maybe is still important. I don't know. I will think that probably I would prefer probably besides this 1 hour, this bounce here, this breakout seems a bit risky to me. And that would probably rather wait just for a 4-hour candle to show that this impulse is finished. So what I'm waiting for basically is 5 to 6 candles not breaking that bottom. That could be the start of a reversal. Or one other thing could be a good candle close above this resistance. It's marked as green, so that's not so logical. Let me make that orange. And this too. All right, that's a bit more intuitive. So a candle break. Sorry about that. A candle break above this resistance would, I think, indicate a break of resistance. Let's see what I'm looking for. I think a candle close near the high, a candle like this, right, would indicate already the turnaround. And because we are in a downtrend, I think we could wait for a retracement of that candle and look for a bounce upon the retracement. Same thing for this trend line, basically. So, kind of scaling in a way scaling in or trying to sneak in a long after a break because it is in a downtrend is not as easy sometimes, right? You got to wait for the candle and then better wait for a retracement because of the fact that there is that downside pressure still. So I would rather wait for the pullback and continue. Another reason could just be, in fact, there's nothing wrong just taking a long right in here, I think, with a stop loss below it. It is possible, just because of all those factors lining up, that could be just a very simple trade as well without any need to make it more complicated or more fancy. So that could be just an alternative, I think. Nothing wrong with that. Stop loss 60 pips and target 110, which is about 350. With a trail stop because that's a pretty high target, 109.80 let's say, or 109.60 maybe, and that's a target that might not be hit this week, probably not. So you want to trail stop it. I would trail stop it, or may take a market exit if I see some stalling and divergence between tops. But there's I think nothing wrong because of the level of confluence. Normally speaking, I wouldn't go long right into resistance like that. But considering all these factors that we just discussed, the likelihood of this zone indeed causing a bit of a rally here, I think, are so large that, from my perspective, it makes sense. If you have time to monitor the charts, if you have time to, let's say, keep an eye and hunt for better position, maybe, then in that case, I think it makes sense to wait for a deeper retracement to get a bit of better, smaller risk, bigger reward potential, or wait for a bit more confirmation with the break and pullback. So it depends. Sorry, unfortunately I have annoying throat stuff, but so it depends, how much time you have to monitor. If you have more time, sometimes easier to keep track of it, obviously, and hunt for better, more confirmation, better setup, etc. Now the pound USD, I got a fib on this chart. Let me just quickly show you. It's basically the wait. Oh, okay. It's just showing the swing high, swing low on the weekly chart. Price is at the or bounce off the 50 fib. So from that point of view, we already had a strong retracement. We're in this downtrend channel. All right, downtrend channel looks okay, but if you compare that angle to this momentum, even if you compare that angle to this momentum, we can see that the angle is quite shallow. right? And that is, from that point of view, a bit worrying for the bears. In this regard, it's starting even to look like a potential bull flag, because here we had momentum, and now we're slowly but surely correcting lower. So if it breaks that bull flag, there could be a breakout up to the 61.8 fib. That's why I had this fib, to show you that that could be the breakout target to the upside. All right. Now at the moment, price is still in this downtrend channel. So let's take a look at the channel. If the channel holds, then this downtrend could continue, perhaps even accelerate, because this could be just the start, and then we could see a continuation or a acceleration, as I just said, of that trend to the downside. But what would have to happen then is that it would have to break below this channel. This support trend line would need to break before this really can be considered a strong downtrend. You often see that when the trend starts, let's consider a uptrend start. Price was in a downtrend, the opposite, right? Price starts to do like this. It looks like a bear flag at first, right? And there are two options. Price, it isn't a bear flag, and breaks support and starts to continue. Or the trend changes, but then a break of the resistance is needed to accelerate this channel, actually, or to widen this channel, right? And then you get a bigger base, and often enough, maybe the angle changes a bit as well, and you start to get a bit more bullish angle like that, right? And you get something like this going on. All right, so in critical points, right here, let me make that orange, right, where the orange circle is the bottom and top of that initial channel. Because if one of those two lines break, that will most likely give the direction of of the new trend, whether it's going to continue down or will it reverse up and make a new trend channel to the opposite side. So with that in mind, that's why I think that this is so important, because if that breaks, we could have that breakout, and that's why I think that this support is so important, because if that breaks, we could have the acceleration. All right, so from a Elliott wave perspective, these could be all kind of like one ways, 1, 2. And then the break below the support of this channel would indicate most likely the start of wave 3. If it breaks the resistance, then these were all kind of like ABC corrections, and this is then following through with this momentum. All right. When placing a fib, let's see, 78.6 fib will be the next bouncing spot, or this trend line. Target to the upside, the 61.8 fib, probably equal to the minus 272 target as well. All right, let's move over to the 4-hour chart. Recently, we got a break here of this support line, and price is continuing lower. And there's no reason necessarily to not look for shorts here, because just because price is in perhaps a big daily bull flag doesn't mean that shorts are not interesting here. We got plenty of space down to this trend line. I talked about the pound dollar in my recap video yesterday. Not sure if you saw it, but you can find it when you go to wave analysis on Mondays. And this is not it. This is today's wave analysis. But in that video anyhow yesterday, I was talking about shallow pullbacks in the pound USD until we bump into this bottom or this support trend line. So shorts, definitely nothing wrong. And then again, of course, below this, just have to be careful of the bounce potential here. All right, so from that point of view, yesterday in that video, I said if it retraces quite shallow, could get continuation, and it did. There was a bit of a pullback, but otherwise quite shallow, and we're getting a continuation. So from that point of view, I think that pound USD is interesting for shorts. All right, let's take a look at this hourly. All right, let's see. We got probably 38.2 fibs at the very maximum to expect because we are in a impulsive wave 3 type of price action. How do we know that? You can use those moving averages to get an idea about that. Look at all these candles below the 21 EMA. That's one of those hints that explains to us that price is in an impulsive direction. And on a lower time frame even, like the 15, you can see the price is trying to break below this bull flag. Bear flag, sorry. All right, which is just did. So London Open, I think, just happened 15 minutes ago. That was the London Open, this candle, and it broke through this kind of flag. But I don't consider it a break as yet, though, personally, because I need a majority of the candle to be outside of the trend line, which in this case it isn't. But it's trying to break at least. That's for sure. So from this perspective, I think it's in a bearish environment, and I think waiting for this hourly candle to close. I thought there was some pound news later today, but maybe I'm wrong. Maybe it's tomorrow. But if there is pound news, typically it's about an hour, 15 minutes from now, or an hour 45 from now. That's something you might want to consider to wait for that to finish. Right? Always be careful of that. But in general, this is looking like a bear flag break, and if this hourly candle um, closes below this 21 EMA band or closes below this fractal, that could be a breakout trade worth considering to the downside with a target probably the 150.75 is a conservative target, and a more aggressive target would be aiming for 150.12 and a 61.8 target. So that could be a breakout trade to the downside, I would say. Waiting for, even if it breaks, waiting for a small little pullback here. For instance, on a 5-minute chart, you can see already impulse coming into play. What easily could happen is that it pushes down a bit, then starts to make some kind of correction up to the 50 fib, and then turns around like this. All right, so waiting for this to happen, the pullback and continuation could be ideal, I would say, for this pound USD 1 hour bear flag break. Typically, we'll see the 5-minute oscillator roll down like this, start to retrace back to the zero line. Once it kind of reaches that, goes a bit above it, we'll see it turn back. Right, and then often enough, break this support trend line, this mini bear flag on a 5 or 50-minute chart. Get the turn roughly at the 50 fib here, and you'll get a follow through to the downside. Those are often, I would say, the best moments because it's obviously the smallest risk because of the small time frame. But it's trading it at a spot that higher time frames are showing that there could be a good follow through, a good continuation. So decent reward potential. And what does that mean? Smaller risk, decent probability, I would say, and good reward. So even if this trade does not work out this time, I think in the long run, when using these cases, like these situations, I think obviously is still a positive net outcome, when looking at a larger number of trades. So one of the things would be nice is to see this dive below zero a bit more, right? So I would like to see a bit of a follow through here before getting the correction, and then I'll put a fib from here to here. Probably would like to see price hit 150.51.10 here. 151. Something like that. Could even put a fib from here to here. And looking for a hook back to probably 151.25-ish, depending on where this stops. Obviously, I'm looking into a future fib, so a fib that does not exist at the moment, but might in the future, depending on where the low point area is. But you get my idea, I think. And that's what I'll be looking for. Could be the 38.2 fib as well, by the way. Now, if that does not pan out, how about if it turns right here and doesn't make any smaller downside still? Then in that case, this hourly candle probably has a big wick at the bottom. So if this hourly candle closes strongly, and strongly I mean a close near the low, then we'll probably see a good 5-minute follow through. If this has a wick at the bottom, this hourly candle, then we might not get the expected break of this bear flag and have to be a bit more cautious. Maybe price will retrace a bit deeper, or the break will happen later. I think the break will happen. It's just a question of whether it'll be now or maybe like 4 hours, 5 hours from now, maybe a New York session. Those things can easily happen as well. That just takes a bit more time. Yeah, of course, Richard. Definitely. Sorry, I just see your question now. I'm always definitely interested in seeing your opinion and others as well. So I highly encourage it. Do you have a screenshot for me? If you want, if you change your mind, no problem as well, of course. But I only saw your comment now, so let's see. Yeah, that's about it. I guess taking a look at. Okay. Sorry about that, Richard. That I was a bit late with that. I mean, daily candles definitely looking strong here. So weekly candle also got clear bearish candles still dominating the chart. We had last week a turnaround. We knew that 2 weeks ago was a bullish candle here. So it did spike a bit above this, as you see, a bit above that was expected. Hook back, continue like that, but then ran into the resistance of this candle and made a turnaround and bearish candle. So we're getting a follow through. We broke already last week's low. So there's no reason to continue, I would say, and challenge these bottoms. Bullish candles are small. Bearish candles are dominating, bigger in size, near closes, near the low. So I think that it is just a question of time before this continues lower. And obviously, as I said, there are reasons to consider how do you say it? There are factors that could turn price back up at this level at the very minimum. Or if that price does push through it, then we could get that bigger breakout. Alrighty. Dollar yen, talked about that one yesterday too in the video, and the dollar yen, I said, should be making a correction to the downside. I was hoping for a bit bigger correction, was thinking that this could be a bouncing spot here before we get a bigger correction up to here, right? I was looking for deeper fibs. That did not happen, and we're already breaking as we speak. But one of the reasons why I was expecting a bigger downside, first of all, we had a 5 wave here, which is either a 1 or A, and this was looking corrective, which is therefore a 2 or B. That's one thing. Secondly is there's divergence between these tops on the 4-hour chart. Third thing is that price is at a 78.6 fib when putting a fib from here to here. Resistance, strong resistance spot. Yet again, another reason why price could make a retracement. Like the euro dollar, a lot of reasons to see this move down. Now we're breaking a rising wedge as well, by the way. When looking at the angle of this resistance line and perhaps this support line like this, indicating a break of that rising wedge, a hook back to it, and now follow through. So a lot of things to consider why this could move down. And prices in a breakout as we speak, as we're having this webinar. Good bearish candles. Sorry. Poking through these fractals already. And I think that one of the ways now, if you're not in that trade already, probably the best is to wait for this candle to close and just wait for a retracement of that candle. I think there's probably the best way. The stop loss could, I think, be okay above this candle. Because if this isn't a momentum to the downside, it should just keep going like this. Obviously, sometimes there could be a bigger retracement. That's the risk of having a stop loss behind the candle only. But an entry, I think, somewhere around here when it's retracing these candles at 122.70, stop loss 123-ish, is what I'm probably thinking about at the moment, with a target at 122. So small trade, really. I mean, looking at a 4-hour chart, it is a small trade, but it would be completing at the very minimum what seems to be like a 3-wave correction here. I'll use the was in a triangle and broke that triangle, this resistance, this support trend line. And in my video yesterday, I was saying that I believe that this is a pullback unless proven otherwise, right? And the level that I consider to be otherwise is this level, this bottom, with 70.70. Otherwise, I think that still this could be just a simple pullback continuation. And indeed, price did bounce off the 50 fib, as you can see, and let's see how much follow through it gets. That remains to be seen. But it did make that bounce at one of these fibs. So it seems that there's a good chance that that could indeed happen, as I said yesterday. Now, part of the reason for that is the weekly candles here that are showing. First of all, this is a pretty big zone. This could be just a bear flag on a weekly chart, but a bear flag on a weekly chart, could take its time, right? And that's why we're kind of at the bottom of that bear flag. Potentially, we got space up to the top of that bear flag. That's one thing. Secondly, is we broke out of this correction, and we're kind of filling the space right between the moving averages. Reversal trade, but nonetheless, we are above short-term resistance, which is the 21 EMA. And we can move back up to that long-term moving average, like we did here, right there. There is slight divergence between, at least a single one, between these bottoms. So going back to that moving average is certainly something that I am counting as an extra reason why it could be a bullish rebound here. Let me get rid of this. All right, so if anyone took that trade, then I would say you're doing well at the moment. You could either move the stop loss to below this bottom, or leave it as it is. And the TP for the moment, I would say, is up here at 1,000. I don't think I mentioned that in the video, but I'll do it right now. It's 1,000. But I'll definitely trail stop the 4-hour fractals to the minimum. If it gets up to the minus 61.8 target, it might be even worth trailing stopping the 1-hour chart. 1-hour chart, zooming in. that's something I like to do personally. When I get closer to the target, to use lower and lower time frames to lock in, to move the trail stop loss at closer support levels using lower time frames. So, for instance, let's take a look at this breakout. Sorry. let's say that you took this breakout trade here because of the trendline break that we talked about last week. And you see price going up here, and I'm making correction, and it starts to move up again. You know, instead of keeping an eye on a 4-hour chart, one of the things you might consider when you see a second break like this is say, okay, now it's starting to push in my favor yet again, and I don't want to trail stop it too loose, so I move into the hourly chart or even the 50-minute chart, and I'll trail stop the 50-minute fractals, and that will be here once it starts breaking the second time, right? This was the first time. This is the second time. I'll start trail stopping the hourly after the second break, which is here, which would bring the exit right here. Right? On a 4-hour chart, you wouldn't have that. You wouldn't have that fractal yet. It would be only here. But an hourly you would. On a 15, let's see how that looks like. On a 15, it would be almost the same spot. Just a tad higher again, because there's a better fractal again there. Well, there's even a fractal here, right? That are a bit lower, but I always go about 6 pips below it. So probably I would not be taken out on that one. No, because it's only like a 1.5 pip break, which is not enough because I use a bit of margin below the fractal and above it. All right, but that's something to think about when using trail stops on different time zones. Time frames, but only when the price has been clearly breaking in my way or continuing in my way or has shown another breakout, right? A renewed continuation. Right, this is the first breakout once again of this trend line, and then this is a bit of a pause here, for instance. And so that's what I mean with trail stop. Now, for those that are not in that trade, I didn't see the video yesterday, then let's take a look now. Looks like we're breaking above the moving averages as we speak. So let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'll probably let this candle finish. If it closes bullish, would look for a retracement probably back to this 72.07. Stop loss, I think, could be enough here. A tighter one. That's very tight, I know, but I think it makes sense. Maybe lower risk than usual just because of the tight stop loss. That already, because of the tight stop loss, allows the lot size already to be already a bit bigger if you're using a risk-based system, at least anyhow. So therefore, maybe using a bit less risk could make sense because this is quite, or you could use a looser stop loss here, but I don't know if that makes sense because of the fact that this could still be correction and it could go down to a lower fib. In fact, probably the correct fib is all the way down here, but that's pretty big, right? We're talking about 140 pips, so that's maybe a bit on the high side. I probably would just take the risk with, I myself at least, rather probably just take the risk, less risk, but tighter stop loss. Put it in kind of the middle of the playing field, but with the knowledge that at least that if the trade goes, the R2R kind of compensates that extra risk there. So I think it is in a breakout. Basically, I think it's in a breakout that there's a good chance of a follow through here. There's always a chance of weakness and a bigger correction. That's why I want to take a look at this 4-hour candle, basically. How does it look like? All right, so right now, those are my 2 cents. On our 4 majors, I would say, or first 4 pairs that I typically look at. What else? Talked about the Kiwi and the fact that this could be a bull flag, and that bull flag kind of theory disappeared for temporarily, at least when it broke through this support line and went into a downtrend. Now, although it's not a bull flag anymore, it still could be a correction from our upside, but that probably still depends whether price can break through this resistance. If it does, then there's a chance, just like I was talking about the Aussie, impulse, this is still looking like a weaker angle than the upside, and we can get that breakout again. Price action, bullish candle, could be just a retracement. Head and shoulders, I don't know, maybe I'm seeing a reversal case yet again for this Kiwi, and kind of building some clues as we go along about dollar weakness, if at least from a technical point of view. I don't know, maybe I'm biased somehow, but that's what I'm seeing. Um, Not that I'm biased, I mean, in the sense that maybe I have a blind spot for some other type of analysis that hasn't hit my radar yet. So if you have that, by all means, please feel free to share it. But at the moment, when I'm looking at all these first $5 pairs, it seems more like dollar weakness. But obviously, I'm not sure. Let me take a look when the Fed has its big moment of the rate hike. I'm not sure when that is in December. Don't forget that there's a third option that could happen as well. Market just goes silent until that moment, waiting out the storm and looking for guidance from the Fed before making any move. So I'm not sure how far we are from that moment. Looking at December, I'm quickly looking at a different screen. Got ADP on December the 2nd. Hayden is speaking that same day. Interest rate on the euro, December 3rd. NFP, Friday the 4th. That's all the first week of December. Already promises a lot of fireworks, I would say. Second week of December, pound and Swiss interest rates, and pound, euro, pound, New Zealand and Swiss, dollar retail. So it's not the second week. Sorry about this. Third week. It's the third week. It's December 16th. After that, of course, a week after that, end of that week after, you got already Christmas, holidays, and then New Year's Eve. Anyhow, so that's something that could happen. Maybe not now, but 2 weeks from now, things could quiet down. Let's see. Anyhow, bull flag break still possible. I would say not bull flag. Sorry, breakout of this channel. Otherwise, I don't think there's much interesting. This could be a breakout, but this, I don't know, this not very pleasant environment. But that could be a breakout right here. Moving averages are a bit awkward, but break, pullback, continue perhaps on the Kiwi if it breaks the support trend line. Dollar CAD still pushing a bit higher, challenging this top. Kind of sneaking in a bit of more upside, right? And the bit of a reversal I was talking about last week did happen right here. Remember I was talking about a reversal on the dollar CAD, and after 5 to 6 candles, 1, 2, 3, 4, 5, somewhere here, price was in the moving averages. That's something to consider when 5 to 6 candles, they'll break at top or bottom, but price is still in the 21 EMA band. It typically, on average, you will most of the time see a bounce still. What is a good thing to do is put a fib from here to here and look for retracement up to one of those deeper fibs. And that typically will be then a turning spot for that bigger correction, like this. So price hitting a deep fib indeed, moving down to the target, making that ABC correction, and then still price using support to make one more rally. But here indeed, we did get that retracement trade. Now, price is still in this choppy kind of rising wedge, and perhaps we'll get again a bit of a bounce and correction like this, or price might just continue um, the continuation, the flat continuation of that is probably a bit difficult to trade. But if it does break the support, then probably have to wait for again a pullback. This is a pretty heavy resistance level, so obviously if it breaks that to the top, then things change. And I would be looking at it differently. I'm not sure if I would be trading anything at that point, but certainly we're getting into potentially bullish zone, obviously. All right, let's take a look at some of the crosses like euro yen, pound yen at least, and euro odd, pound odd. All right, euro yen. I was talking about on the 4-hour chart here the potential for a bigger correction. And no, not really. Yes, it did bounce off the 61.8 fib, but it didn't really go to the target I had in mind and failed, and ultimately didn't get that high and started to move lower and broke through this support line eventually. And well, if you're looking at this and you see a rally like that, a second rally, always be careful if a trend line like that breaks, because that could be actually the breakout continuation. Therefore, it's wise to use a trail stop loss in those cases. At smart points, I mean, at logical points or at spots where you've already had two corrections, right? You want to indeed be careful and not over risk or keep the risk at the original spot when probably it's not that needed. I know it's difficult, easy to say in retrospect. I understand that too in this case, but I'm just trying to show at what points it does make sense to be a bit more cautious with the reversal trades. I do think that this one meets those conditions, but so it broke that trend line and didn't respect the 78.6 anymore. And one of the reasons probably is that it already made a three-wave correction. And now back in a downtrend. All right. Let's see. Try to establish what the next key support level could be. This downside has been certainly choppy. Yeah, and this trend line, this support trend line was part of the reason why a bounce could have been expected. Yeah, I'm not too jumping for joy with any potential here. Hasn't been about a potential upside here because it's pushing lower, but it still seems that there would be signals of a potential bounce yet again. Divergence also in play. Support trend lines. And well, if the euro dollar will make that retracement we talked to, or I was talking about at the beginning of this webinar, and the euro yen could follow, at least partly. I don't know. It probably would rather focus on the euro dollar. I think at the moment, the pound yen. All right, we talked about this upward channel for a while now, and there are a lot of trend lines we can draw on this chart with various angles. Some of them have broken, others are being broken as we speak. And oh, it looks like with this last push that certainly those support trend lines are out of scope. We already had quite a lot of falls already on this pound yen, but it was all above the moving averages still. So, oh. All right, pound seems to be really falling here. Let's see, is that the dollar yen or the pound? Pound is pushing it a bit more. As I said, we'd like to see it fall a bit further. Seems that it did do that a bit, but maybe it's the dollar yen that's doing it mostly. Yeah, dollar yen is getting a bit more follow through. Pound yen is certainly following. Yeah, I think that considering the 5 minute momentum that we're seeing here, a bit of a now it seems a bit late to me, but I think if we get this oscillator back to the zero line, get a retracement back to halfway to the 50 fib, that this could be a good shorting zone. Could be a break, pullback, continuation. That does make sense, I think, on the pound yen. Yeah, the thing is with these particular pairs is that the downtrend has continued, but it's continued in such a way that we haven't had any pullback now for about 3.5 weeks, serious pullback. So it seems like the problem with that is that there is a bit of divergence between these bottoms and price. My rule of thumb says that I should expect price to go back to these moving averages, the long term, the purple ones. So therefore, I'm not that interested in shorting it. And it seems more like a euro dollar moment where it could retrace, maybe for correction. However, the euro odd doesn't have the same, I would say, same support level as the euro dollar. I mean, there could be some support visible here on the left, but it's not the same, I think. So it doesn't seem that appealing to me, but I would say still the chances of a bounce eventually happening makes sense. I think this could be a moment. 1, 2, 3, 4, 5, 7 candles not breaking the bottom. Good thing to keep an eye on is probably this resistance fractal, because we've had lower highs, as you can see already clearly, ever since this point 3.5 weeks ago. So it could be good, maybe instead of taking a reversal, just to let price break above the 21 EMA, then let it go back to the 21 EMA, and then use the 21 EMA as a spot to look for bouncing spots. I know that could sound boring because it could take a while, but that's something that I think might make the most sense on this euro odd. All right, some other pairs maybe like Swissy. We didn't talk about the Swissy for a while. Swissy is something to be aware of. It is right at the high resistance point here. Remember when that big crash in the Swissy happened at the beginning of this year, Apparently that price level is about 155.20. Well, price is back at that level. And of course that should have some effect, and it did have an effect, pushing it a bit lower here. So I think there could be some pound weakness today. And this could be a breakout trade for kind of closing the gap between the moving averages and making a breakout trade down to the long-term moving average. So it looks bearish. I think the pound looks bearish at the moment. All right, so those are a few trades that I have in mind for myself. Just to summarize, I guess the euro dollar upside, pound dollar downside. Audio is the upside. Dollar yen downside, but it's already happening. Probably too late for me. But let's see. Kiwi either way. Pound yen downside. Euro and New pound New Zealand, by the way, we didn't talk about those. I know those are, a bit more costly currency pairs crosses in general, but still interesting. I would say the break of this bear flag after good impulse. A hook back to that same resistance trend line, I think could be something to keep an eye on at roughly 164.50. Pound New Zealand had a rising wedge, broke that rising wedge. So as long as price stays below this trend line, could keep marching lower. And support, well, seems to be close to breaking it, I guess. It's not a good trend line, but I guess just using the bottom probably. Could be some good space here as well. All right, tomorrow we got strategy, and in the evening then it's going to take a look at price action in trading school, and that's just going to be a continuation. It's going to, if anything you missed basically in the first few weeks, it would be great if you join up with that, because you can ask, cover some questions you might have. Then Thursday we're going to take a look at the Forex market, but from a different perspective. We're going to use range bars and see how you can trade range bars instead of candlesticks, in fact. So hope to see you in those webinars. I'll close it a bit earlier today, as my throat is not enabling me to speak as I normally would. So I'm going to take a small risk, and wish you good trading. Hope to see you in these webinars, and happy hunting. All right. Cheers, everyone.